I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting, and I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations, and of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Welcome to your 3-minute update on the U.S. real estate market as of late June 2025. Let's take a look first of the market overview. The U.S. housing market is experiencing a notable shift. After years of tight inventory and rapid price growth, the landscape is changing. Inventory is rising, sales are mixed, and affordability remains a central challenge. Home sales took a significant hit in May, dropping 13.7% from April and falling over 6% compared to last year. This is the lowest level seen since the pandemic, with the South seeing the steepest declines. In contrast, existing home sales surprised on the upside, ticking up 0.8% in June for the second straight monthly gain, though they remain slightly below last year's pace. Inventory is building across the country. There are now over 500,000 new homes for sale, enough to last nearly 10 months at the current sales pace. This marks a clear move toward a buyer's market, especially in the South and West, where new construction has outpaced demand. For sellers, this means more competition and a growing need to price homes realistically. About 40% of homes are now selling below asking price, and price cuts are increasingly common. Despite the inventory surge, prices are still edging up. The median new home price is $426,600, up 3% from last year. Existing home prices are also rising, with the median now at $422,800. However, with more homes sitting on the market longer, the pace of price growth is expected to moderate. Mortgage rates have dipped slightly but remain high, with the average 30-year fixed rate at 6.76%. This keeps monthly payments elevated and continues to sideline many potential buyers, especially first-timers. Cash buyers and investors are stepping in to fill some of the gap, now accounting for over a quarter of all sales. The Northeast and Midwest are outperforming, with modest sales and price gains thanks to better affordability and steadier demand. Meanwhile, the South and West are seeing slower sales and more unsold inventory, as higher prices and rapid construction outpace local demand. Buyers now have more options and negotiating power, but high rates still limit affordability. Sellers must adapt to increased competition, price strategically, and be prepared for longer sales cycles. Investors should watch for opportunities in regions where demand is holding up, particularly the Northeast and Midwest. The market's next moves will depend on mortgage rates and broader economic trends. If rates fall, pent-up demand could return. For now, expect a more balanced market, with buyers gaining leverage and sellers needing to adjust to new realities. That's your 3-minute market snapshot. Stay tuned for further updates as the market continues to
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting, and I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations, and of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Right. Welcome, everybody. It is same time every week. We're back here for our Dealmakers Live. We have a full slew of events here for you, and really looking forward and excited to bring you what we prepared today. So now let me start with introducing our host organization with Real Estate IQ. We have a slew of products here really to help you as an investor succeed in acquiring and also dispositioning your deals and making profits. One of our core products is our distressed seller leads, right? We call it off-market leads, where we mine the freshest data every day from the public records for you, so you can then focus on doing outreach on the sellers. Now let's look at what some of our clients are saying about Real Estate IQ, that this is the best source for getting distressed sellers lead generation, and it's a highly targeted list, right? This is not just any list that you can purchase from a list broker. This is a highly targeted list that requires a team of data mining researchers to find these on a daily basis, monthly basis, so you can get in touch with the sellers. Another client talks about the importance of having a consistency of lead flow, right, which helps you build a consistent pipeline, and that leads to a consistent deal flow. Okay, a couple of actual profits, right? Salvador got $30,000 in profits in his on his first deal, and he has more deals coming along the way. Jordan got 2 deals totaling 60,000. What I want to point out here is the deals profits, right? They kind of vary, they fluctuate. It really depends on deal by deal. First deal he got 55,000. Second deal he made 5,000. Regardless, 5,000 is still a really good win. Homero in his first 6 months made 100,000. Ismail, shared that he has been a long time client, and in his most recent 10 transactions, he made 80,000. He's a wholesaler, so basically an average of about $8,000 per deal. And then Daryl put $1 million under contract, and he's expecting a 10 to 15% profit margin. So, and then last but not least, Brian got 10,000 on his first deal, and he also has since joined our Deal Accelerator program. And what is the Deal Accelerator program? We'll share a little bit about that shortly. Quick reminder: this event and everything we share here is for educational purposes only, and you should always do your due diligence before making any investment transaction. We don't offer investment, financial, or legal advice at this event. So just a reminder that you should join our deal making community. All right, we have a weekly class and weekly meetup where we are actually getting together and rolling up our sleeves to do outreach on how to find these properties. And if you already have a lead and you need help closing on a deal, go ahead and reach out to me, and I'll route you to the right person. Just like I think, what was it, late last week, I got a call and a text from an investor. He's looking at a deal in San Antonio. He's looking for funding to put in an offer, and we're able to help him with that, with Tamla and Randy's help. Your speakers, we have Tamla and John with us today, and yours truly, and they have a wealth of experience, right? Everybody here has decades of experience in investments and finance and real estate, and so you're in for a treat. Congratulations for making your time here. So our agenda, first 5 minutes, we just did that. Welcome and introductions. Then we're gonna look at the market update. We have a deal case study here prepared for you. And then we'll have John to talk about our wealth building techniques and mindset that's required for entrepreneurs. And then we'll share with you some upcoming events as well. So let me introduce our first speaker, invite him up on stage. Mr. John Huang is our partner here at Real Estate IQ. Welcome, John. And yeah, he's a wealth of knowledge. I still remember first time meeting John at a coffee shop, and he just wowed me with all these new information that I didn't think I needed, and that I needed to know. And really appreciate him coming on board and really kind of putting this into practice. One of the things that really stayed with me, John, was we were talking about as entrepreneurs in our own business, we are a lot of times we are the sole engine, and then everyone else, become a part of the engine. But that gets really tiring for a solo entrepreneur. And so, how do we kind of turn the organization into which everybody is an engine? And that really that still sticks with me, and that's kind of what we're trying to accomplish here, is to everybody pulling and kind of creating and producing. So without further ado, John, we got the market update for everybody.
Yeah, I'm gonna speak to the market. Steve used to speak about the market movements, but I'm gonna just briefly touch on a couple of points. And then in the later on session, I'm gonna delve into and deep dive into some of the specifics. So right now, if you aren't aware that the stock market has a very bad turnout in the middle of the week, which is Wednesday, very bad. Okay, very, very bad. But you know what? Stay tuned, because last week we already predicted. If you follow what we have talked about the last week, you were already prepared. But the rate cuts is taking further effect on the mortgage rates. Okay, and the mortgage volumes is going up significantly since the federal rates cut. Okay, and however, there is a unexpected situation going on that even the mortgage rate is actually relatively stable, sliding down, but it's ticking up a little bit. Okay, ticking up a little bit because some rumors that is going on, right? So the refinance sentiment without too much of a drop, unfortunately, because of that tipping up, and the sales, the national sales of the properties and the real estate assets went up a month to month by 1%, which is not too bad in November, because remember, November is a cooling down season during the Christmas, during the Thanksgiving, where people kind of take vacations and stay away by saving a cash flow for their giftings and travels and all that. So we anticipated that actually the sales go down a little bit, stable. Off-market leads and the wholesale is actually also cooling down, right? But you will be surprised. There are so many good deals out there, right? In the new sales, actually month to month, new sales. So we're talking about a brand new house sales, okay? We're not talking about, existing home sales. It actually went up significantly just lately, okay? From my neighborhood, I got to know several people actually were moving houses, buying the new houses, okay? So then the Texas, the mid-home price to the end of the year is going to stabilize around the 350, okay? So overall, yeah, the property sales turning into the buyer's market. You already heard Steve talking about it. And why? Why is a buyer's market? As I already said, a lot of people holding on to their cash flows and they're saving the money for different regions and different purposes. And they're waiting on the bonus to come in so that they can take a trip, right? So the buyer's market is when there are a lot of properties that are actually on the market. In a second, you're going to see that. And on our newsletter, we actually disclosed how many existing properties out in the market. So we call them a days on the market and the pending sales and the monthly inventories. The monthly inventories on average in Texas is above five month worth. That's a little bit saturated, okay? A little bit saturated. The only area that is kind of a between 4 and 5, 3 and 5 is actually DFW area. So if you stay in Tarrant County, Collin County, and these Dallas counties, and you are due for a good treat for the end of this year, okay? So pay really good attention to the deals that is available in DFW area. All other regions and metro areas, they're a little bit saturated with the inventories, right? However, good deals, you got to use off-market leads, the distressed owner and the property leads to find out. And Texas is still ranked the number one with the 10 to 15 more deals and the 5 to 10% spreads. Okay, so the other thing that we already shared in previous sessions and the live streams before is that 2025 is a year for wholesale. It's already predicted last year, and it turned out to be very true. And so with that said, I'm going to save a little bit of time and let we delve into some exciting deals that Tamla and Steve are going to bring to your attention. All right.
Thank you, John. And we'll invite John back shortly. All right. Now we have Tamla. So a quick intro with Tamla. Tamla has taught me a lot about real estate. We started working on the deals. We have known each other for more than 10 years now. And we really started getting in deals together about this time last year, a little more than a year now. And we have acquired quite a few properties and really working very closely on each deal itself, and just kind of seeing how Tamla works her magic and turning a house that tend to be in a desperate situation into something that is relatively affordable. It's pretty affordable housing and really, really nice, high quality living. And so really appreciate that. And Tamla, how are you? Welcome back.
Good morning. I am good. I'm having a little bit of problems with my internet this morning, but right now it's good. I'm online.
Yeah. I'm glad you got your internet
Can you hear
on
me?
now. We can hear you. We can hear you.
Okay,
Can you hear
good,
us?
good.
Good. I know you
I
were
can
working
hear
on
you.
your.
Very good.
We know you were working on your internet for the new house that you're moving into. So glad you got it going.
Well, we are here. We are here. We will be going through renovations in the house, and today they are actually shimmying up the foundation on the house. So if you hear noises, loud noises, that is what you hear.
Yeah, that's what we're hearing a little bit. Okay.
But we're excited to be here.
So Tamla, tell us about this property. You just told me about it, I think a day or 2 days ago, that we already got under contract.
Yes, I got this under contract while you were out of the country. This property is in Mejia, Texas. It really needs very little work. Our real estate agent contacted me about this property and said that she had clients that had put a contract on it, had an inspection, and there was a problem with the electrical. It's not a major problem, but we are going to have to be doing a little bit of electrical work in it. But her clients backed out of the offer because it scared them. She called me and said, if you want this house, this is what you can buy it for. I feel certain because this is what my clients had offered on it. So she told me, I took a look at it. I looked at the inspection report. I had our electrician go out and take a look, and I said, we'll do it. This house is move-in ready. It's got to have some appliances, and we are going to have to move the vent-hood over just a little bit because they put it too close to the pantry door. But we're talking minor work. The electrician said that the problem was not major at all. In fact, people could be living in the house and he could make the repairs to it. It would be like an afternoon repair. And this house is move-in ready. It's a very nice house. And actually, our property manager already has tenants lined up for this house. They are waiting for us to close on this house, and we are leasing it for $1,600 a month.
That's excellent. It's like almost a deal that's too good to be true, Tamla. You know, it's way under that 70% rule.
Yes.
Also, because of that, and in addition of that, it really fits that 1% for a rental property as well.
It does, and it's just an example of when you get an inspection report, don't shy away from the problems. Seriously look them over, contact the professionals and let them take a look at it, because it's an inspector's responsibility to find every little thing that may be wrong with the property. Like I said, the electrical scared off the buyers that had a contract on this property. And we're not talking about anything major. It's not even dangerous. The problem is not dangerous. It's just something that needs to be brought up to current code. and it's not an expensive repair. So we're not talking about all new electrical. The house has been rewired. It was rewired several years ago, so it just needs to be brought up to current code. So we're not going to be spending a lot of money on the electrical. I think this is a situation where we have our team together. We have our real estate agent who is also our property manager, and she saw this. She knew that we were interested in buying good rental properties at a good price, and that she knows what type of rental properties we're looking for, the quality of work and what we want done. We're wanting good properties for people to move into. And this house is all of that.
Awesome. Yeah, it looks pretty much ready.
It's a very nice house.
That's exciting. Cool.
Yes,
Next,
I'm very excited about it.
So Tama, let's talk about some of these deals. I have one feature deal prepared, and then we actually have quite a list of properties that are available for those that are actively looking for deals. So here we are featuring this house. As you can see, there's a lot of shrubbage, trees and shrubs blocking the view. It's in Baytown, really close to a lot of the happening places in Baytown, and it's asking for $130,000. Okay, for those that are in the Houston area, and if this is it falls into your investment area, your buy box, go ahead and reach out to us and learn more about the property. So I just kind of redid this slide. We have a seller that has a portfolio of rental properties, and she's trying to unload them. There's quite a bit of them, as you can see, under the buy and hold. A lot of them are in the Dallas-Fort Worth area. There is one in Austin. Okay, so for those that are looking for buy and hold, reach out, and we'll match you up with the deals that fit your criteria. And then for fix and flip, we got Baytown. That's the one we just featured. We got 6 at Corpus Christi, 6 in San Antonio, and there's one in Dallas also. Okay, a couple of the other ones that are in out of state and other states. And then there's also land in a couple in Texas, a couple in Missouri, and there are 8 lots in Arkansas. And then we also have real estate notes. We got folks that want to sell their notes. There's a note for $148,000 at 10% interest, and the payment is principal and interest. There's another note for $100,000 at 6.5%. Another note at $180,000 at 7%, and then a $35,000 note at 10% interest only. So for those of you who are interested in buying notes, either for income or for trading, that's also a deal source that we can connect you with. So if you're interested in getting into the mix of the deals, right, whether it's for acquiring or selling, we have a deal accelerator program. We have two spots available left in each market, actually. And what we are looking for is ideally someone who has gone through trainings and coaching, and they just kind of need that one-on-one, hands-on approach to really, right, kind of grab the bulls by the horn and learn by doing. So it will include the deal finding training, right, finding the deals, analyzing the deal, making sure it's a good deal, and putting the deal under contract. That's the deal making side of the training. We also include our Real Estate IQ distressed seller list. And if you are, specifically just looking for a deal ready to go, you want to start rolling up your sleeves and working on the deals, that's our deals program. And obviously the funding would go along with it. Basically, everything you need to start making deals and hopefully to start kind of putting this into scale too. Track records, 10 months, 12 stores acquired, and quite a few of these stores are now cash flow. Cool. We also have this fantastic promotion going on that ends right after Christmas. Okay, really, really awesome promotion here for an investor. So if you're actively looking for distressed sellers, right, and getting the deals going, we have a really awesome promotion here, really geared towards getting your 2026 started with a big bang. I kind of talk about the 70% rule, and that's what this 70% formula is. Okay, if you found a deal last week, or if you are looking for a deal to kind of bring to us, this is what you want to use for your offer formula. Your offer should be 70% of the after repair value, which is what the market would go for after it's fixed up, and minus the cost, and the cost being repairs, closing costs, and holding costs. Right, so that's a 70% rule. We actually talk about the 70% and the 1% rule in one of our classes. So if you're not familiar with these, just scan the QR code and reach out to us and ask about these formula and what they mean, and ask for a recording. All right, and now we have John. Your portion is back. We're gonna invite John back up on stage and really share with us the secrets for wealth building. Take it away, John.
Sounds good. Sounds good. Let me share my desktop. Got some exciting updates for everybody. And what our goal here to share the market updates and the financials is not only just to help you to get deals, but also to secure your financial independence and to secure your retirement and estate transfers, right, with the minimum exposure to taxations, penalties, and all these regulation changes or tax, some of the economical up and downs or inflations, right? So let's do some updates, right? And I'm going to include, for those who are new, we're going to include some of the stock market, investment market. We're going to talk about commodities. And we're going to talk about job market. We're going to talk about real estate, where we are, right? And we're going to look at the big picture. So if you're looking to like hands-on experience and the learning, pick up from the best of the best, the first portion that from Steve and Tamler has been sharing on the deals will get you a really good insight on how to look at the property, how to turn them around, and to strategize your approaches, right? But then we want to, all of us, we want you to take a step back and go up a story, right, on a floor, and to look at the landscape so that you get a sense on what the decisions you have to make in your circumstance, in your economical, financial and investment landscape and then time frame perspective, and to decide all these good stuff is happening, right? What is your choice particularly? So we want you to take a step back and take a step up, right? So that's the goal for this portion. It may turn out to be boring. You know why it's boring? Because you have no idea. That's why it's boring. For things that you have idea, you are familiar with, that you are interested in, of course, it's not going to be boring, right? So if it's boring, it's your opportunity to pick up something golden, and so that you can formulate it in your investment strategy. All right, let's get started. First, let's take a look at this week's market. When I'm talking about market, it's a macroeconomics and a U.S. economics market, okay? And for those who participated last week with us on Thursday, we already made some prediction. And usually this is pretty risky, right? As a financial professional, investment professional, you don't want to make predictions. And of course, we already read our disclaimer. So don't take it, as a investment strategy or plan for you or advisory. Otherwise, we're going to charge you, right? I mean, this is a free. So, but you got to use it as at your own discretion. However, we do predict the market based on our knowledge, economic knowledge. So if you look at it, Monday, they're talking about a manufacturing surveys. It was predicted to be a positive, very positive viewpoint, right? I mean, that's previously, and then they predicted actually still very positive, but turned out negative. Okay, what's that going to happen, right? So the market is going to be affected negatively for sure, right? And then if we just look at the, by the way, I'm gonna show you the slides. I'm gonna show you the market performances to these announcements, these macro, government announcement or market announcement. And also there is a home builders confidence index. It actually surpassed a little bit, slightly. So instead of a flat, it went up a little bit. So Tuesday, get ready, right? So Monday was kind of, it's a little bit sad on the manufacturing. So people are holding off, right? So you don't see the rally of the market. But then Tuesday, if you look at it, the employment report, right? Instead of 45,000 new jobs created, guess what? It went up by another quarter. It went up to 64,000. So that will create a rally. A positive energy in the market, right? Unemployment rate, it stays flat, so it's okay, right? Hourly wages actually went up only 0.1%. That's a positive news, okay? Hourly wages year over year is a flat. That's okay. So now the retail sales, what do you think? Well, it didn't grow that much. So that is a flat to negative news, right? And also, other than the automobile, the sales overall, the retail sales overall, actually minus all the autos, it went up significantly. So what does that tell you? Car sales went down very badly. Cars. So if you bought cars lately, a brand new like F-150, probably not good time, okay? Still, you should hold off a little bit. If you are buying a vehicle, utility vehicle, or something, right? Cars, other than electrical cars, okay? So the car sales are going down significantly. So we know Jeep, they couldn't get rid of them, right? The Chevrolet, the parking lots is just full. And then Ford, they're knocking down the prices like leaves in the winter, right? So hold off on that, right? And it's also correlated to our manufacturing survey. So another one is the PMI, right? The PMI actually went down. That is a positive news. The business inventory actually went up. Business inventory went up. What does that mean? That means we're not going to buy more inventory, okay? So the buying power of corporations, companies are reducing. That is actually a negative news to the market. Okay, so it's good news for the inventory for whatever, but it's a bad news for the market. Let's take a look at what Wednesday happened. Wednesday, there were a bunch of talks and remarks and everything. But what really affects the Wednesday stock market was the AI. As a scary part of the AI announcement, okay, in the market. And then Thursday, this morning, there were initial announcement of the jobless claims. It went down. Okay, what does that mean? Well, there is a possibility that today, throughout the day, maybe there is a rally, okay? And then the consumer pricing index hasn't been announced yet, hasn't been published yet. But the CPI year over year actually went down. You see that? It's a 2.7 versus a 3.1 that predicted. So this is going to rally the stock market. Okay. And then the core CPI actually went down as well. Woo, good news, right? Okay. What else that is going on? Let's look at the Friday. Okay. Friday, there are some important information that we need to know. For instance, existing home sales. Okay. It was predicted to be flat, and then the consumer sentiment is predicted as a flat. But let me tell you, mark these words down. Tomorrow, a lot of the futures and also options are due. The call options, put options in the stock market are due tomorrow. Okay, is going to significantly change the landscape, but no matter what the economic data is. Okay, right now the put to call, for people who know investment, put to call ratio. If this is interactive, I'm going to ask an audience, but since I can't see you guys anyway, is a 1.4. What does that mean? Put means a sell, empty your stocks. Call means buy. Okay, so this means that more people, if there's a one person saying let's buy stocks, there are 1.5 people saying no, let's sell. Okay, it's not good. So tomorrow is going to do. So put means a lot of people see the market will go down tomorrow. Okay, by tomorrow significantly. There will be weird things happen. There will be a lot of weird things happening. Okay, for instance, some institutions maybe just sell all their stocks. Maybe they're going to do that. And the options are due, and maybe some of the hedge fund company are going to pull a lot of our resources to invest in the market. Okay, so there will be a lot of they call it a black swan, all right, a little swan events tomorrow. Okay, real estate. Some people say real estate. We're in real estate. What are you talking about? A stock market? Well, because real estate is all about the money. Is all about the cash. Is all about investment. Okay, and a lot of real estate is actually money. Okay, those traded special interested companies. If you know what I mean, the SPIs. Those are the corporations. They are real estate investment projects, but they are traded just like a stock ticks. Okay, so it will be affected by the market movements as well. All right. So what is the prediction, everyone? So since today the numbers look relatively good, but tomorrow is going to be driven by the sentiments. Okay, the put options. So if you look at it as a stock market, since day one, since 5 days so far, it went down. Did we say that last week? We did say that. We said be careful, and we also warned everybody because of tomorrow's Friday. Okay, but you see that today, did I say these are the good news? Yes, I did. I just said that 2 minutes ago, right? All these are jobless claims and CPIs are good news. Guess what happened in today's market? It went up. Did you see that? But because for tomorrow's stock market is predicting what? Is a put. Okay. And that means a lot of people think the market will go down. And there are people who are going to help the market to go down. You know what I'm talking about? Okay. And so we'll see something interesting tomorrow, right? Hold on tight. And remember, the market closed by 3:30 Eastern time. Okay. And the mutual fund, you don't have to worry about it because you can trade at the end of the day. But stock, you probably want to hold off a little bit. Okay. Once the market settles a little bit, then get in or get out. Okay. As you can see, overall in the last 5 days, it's just reducing. And one single day reduction yesterday was significant, just But overall, over today, since there was a dipping at the end of April, and it's a rally all the way around. Excuse me. But there is one thing I want to point out to you. Notice this orange line. What do I call that? It's called consumers sentimental or consumers psychological prediction line. Is it a positive? No, it's not. Is it negative? Yes, very negative. It has been since April. Is negative. So therefore, as a consumer, individual stock investors, people are very hesitating in investing in the stock markets. But there is still a rally going on. So there are the indication is that the institutions, the companies, large investment companies are putting money into the stock. Could it be foreign countries? Could it be a bigger company like JP Morgan and that sort of thing, stock, Blackstone, BlackRock. Okay, so what does that mean for real estate? See, you got to think about it, right? From economic perspective. So when these institutions are putting money into the market versus individual consumers, that means that they're moving their funds, reallocated their funds from maybe real estate into stock market. You get what I'm saying? Okay, hopefully you get it. So that means this is a market that individuals, you have a play. When the institutions are in the play for the real estate market, you as individual, you don't have a big play. However, when they allocated their fund and attention to stock market, they routed it at the end of the year, you, me, we have a chance. Okay, we good so far? All right, next week. So today is holding on, okay, and watch the market. And next week is pretty quiet, except for Tuesday, okay? We're going to talk about the GDP, the U.S. GDP announcement, durable goods orders reports, and consumer confidence report. Initial jobless claim. Initial jobless claim may go up a little bit. So Wednesday, the market may go down, okay? The market may be affected because of the jobless claim go up. And then the rest of it is just really quiet because it's a Christmas day. Okay, wait a second. What does that mean? What does that mean? When there is nobody trading, when nobody buys and sells, what happened to the markets? Can you guess? Steve, do you want to guess? When everybody is traveling or having a Christmas dinner or, hanging out at the candlelight and in carols, singing carols, and market goes down. Stock market is all about excitement. It's all about everybody do something, okay? If there is nobody do something, the market will stable? No, it will go down, okay? So just be careful of that, all right? So next week, be very careful. Be very careful. And this week, maybe next Monday, there's a small rally. We'll see tomorrow, okay? We'll see tomorrow. After the options are put in and finished up, closed out, Monday they're going to put in new options. Okay, new options, basically put option and call options. That will excite the market a little bit, but then everybody will just take it off to do their Christmas thing. All right. So overall, next week's market, to the best, it will be flat. Okay, to be the best, but usually it will go down. And usually, watch this. I'm going to say it one more time. This is my fourth time. Black swan effects. Okay. What does that mean? Weird things is going to happen. Usually the weird things that happens on before and after Christmas. Okay. Usually the market dropped 20% to even 38%. There was 1 year, 2022, actually dropped 38%. Okay, you just be careful, right? If you have a stocks, if you have a mutual funds, if you have your retirement on some money, just be careful with that. Very careful this week and next week. Okay, don't get it too excited and jump in. Now, this is future, some commodities, right? If you look at the commodities, these are the energies, the gas, and all that stuff. So if you look at the weeklies, they're relatively negative. Overall, the market is relatively negative. For monthly, negative and negative. Red is negative, right? But today is actually positive a little bit. Don't count on a 1 day. You got to look at the minimum of 5 days, 3 days, 5 days. But then if you look at, gold, silver, and copper, these commodity, the metals, heavy metals, and the precious metals, noble metals, year so far, it's unbelievable. Steve, do you remember 3 years ago? Not 3 years ago, 2023. I said, silver is going to double, triple. Right now, it's a 4 times. I underpredicted. So I went in to buy some silver coins, right? Now the return is 4 times. Yeah. So
they're very heavy. I just want to say that.
Yes. Maybe I'm not going to predict everything right, but silver, gold, I pretty much know how this thing works. And then the copper, right? And the steel, what do you think steel would go? It's going to go negative because the car isn't being sold. Remember what I said? The car sales is down by 0.4%. All right. What does that affect? Steel. What about the constructions? Well, in a second, we're going to look at the constructions. Okay. Because the building permit is going down so much. So the steel is going to go down quite a bit. Right. What does that mean? If you buy and sell commodity, maybe you want to consider some put option, right? To predict it to go down. All right, so enough of this. Okay, so this is the Treasury notes. Last week we already looked at it, and then the 30-year bond yield is around the 4.7%. Okay, 4.7%. After the reduction, you see this big one, right? And it went up a little bit. It's creep up a little bit. So in the beginning, I said that the mortgage excitement wasn't there because of that. Okay, so there is a rebounding. And then if you look at the numbers are pretty much like a day. It's all negative. Can you see that? And a monthly is all negative except for a few. All the interests from the U.S. bond and then debt perspective. And this year pretty much is all negative, right? Negative, and negative. So everything, the interest is going down. Okay, what does that mean? Okay, watch this. CD is going to go down. Okay, so for those people, remember, Steve, you just talking about that we have some, and a group kind of a pouring and private funding opportunities for people to get a certain percentage of our returns, right? It was not exciting to everybody. It was not last year. It was not in 2023. Private funding, right? 10% a year. Who cares, right? But guess what? When this Treasury notes yield go down, guess what? They're not going to get 4% from CDs in 6 months anymore. They're not going to get that. Okay? Guess what they're going to do? They're going to start pouring cash into real estate. The private fundings. A lot of funding is coming. The more interest reductions is coming or yield reduction from the Fed, the more cash we're going to see in private fundings, hard lendings, and all that. Okay, so our project here to for those who participated in our private fundings and to join in the projects, we're gonna be more expensive now. Okay, it's not everybody can get a chance to join us, right? Right now, yeah. Okay, so that's enough. And mortgage rate is going down and tipping up a little bit, but it is stabilized at about a 6.3 for 30-year mortgage. Okay, but if you look at the 15-year mortgage, it's about 5.54. Actually went up from 5.44. Okay, so the mortgage is unpredictable. It's actually going up and down a little bit. So a lot of people think that if the government reduced the yield or so-called interest rate, but that's not interest rate, by the way, it's a yield. Then all the interest will go down, mortgage will go down, refinance will go up, and everybody would be happy. It's not going to happen. So what does that mean? When the mortgage rate is not significantly reduced, the average buyers, I'm calling out average buyers, property buyers, instead of investors, okay, like you and me, they're different strategy. Investors are not solely codependent on the mortgage. Okay, they're not buying borrowing mortgage and buying house. That's too slow, and it's very rigid. They use private fundings, they use private lenders, and all that, right? So, but the average buyers, they're significantly affected by the mortgage rate. So when the mortgage rate is not reducing that much, the sentiment is going up. They're going to be sad. They're going to be sad. Okay. So they're going to actually hold off of buying the houses. What? You just said, Stephen, you just said it's a buyer's market, right? Yes. But these people, the average buyers, not investors, they're going to hold off as long as possible to wait for the interest to go down before they buy their first house or second house. Okay. Because they're not in the investor's mindset. So what does that mean, everyone? It's a buyer's market. It's a buyer's market. Okay. Mark my words on that. Is this going to last long? Not really. Not really. Once another interest reduction is coming in, the buyer's market will flip. And in a second, I'm going to show you what is a buyer's market versus a seller's market. Okay. Interest rate is definitely one of them. Okay. So people are not buying the house, but investors, you got a chance to buy the house. And all right. What about the layoffs? Well, this is from last week. It didn't change much, but there were a small announcements of layoffs this week as well. So the job, okay, so what does a job to do with my investment, your investment? Well, when the job is not stable and when a lot of layoffs going on, there are a lot of money exchange hand, not for investment purposes, but for protection purposes. You get what I'm saying? Job means protection, security. Okay, it will go into 401k, 457, and 512, and IRA. All these, they're going to make a lot of deals into those when the job is lost. Okay, so they're not going to put the money into the real estate or private fundings or invest in the real estate. Okay, actually, they're going to sell more houses when there are a lot of massive layoffs going on. Okay, so then the building permits, as we said, since the beginning of the year, it just keep going down, going down, going down. What do you think? This is the data from August. Do you think it's going up? September, October? It's not. Okay, it's going down. So less new construction. Okay, remember, new construction. And now less new construction. What promotes the consumers to consider? Well, if they have to buy a house, they will wait. They're not going to buy a existing home, because the interest is too high. You get what I'm saying? The mortgage interest is too high. So they're holding a lot of cashes on hand, a lot of people. Okay. So the private lending, private funding is a great project to motivate at this point. Okay. Tell them, Steve. All right. So what we are promoting, the private lending, private funding project, is definitely a good timing. Okay. Now the house price is still kind of going up a little bit, and then, but not significantly. Not significantly. In our newsletter, we publish reports such as how much of the movements of the property, how much of the pricing has changed and all that. And I'm going to just give everybody a little bit of snippet on our market reports, right? This is our market report. Yeah. And we report like property sales changes, the trend for as of this week, right? And which market is hot, which market is cooling down, and what is the change rate? What is the long-term rental, short-term rental changes, right? And what do you need to consider? Lending and the borrowing changes, right? And we're also talking about a wholesale strategy. What do you need to consider? Oh, this is a really good report. And we got a promotion barcode. Okay. All right. So that's our newsletter. If you need it, make sure at the end of the session, you click the barcode to scan it. All right. Scan a barcode so that we can send you the newsletter. Okay. But anyhow, the house price value for existing homes just keep going up. Okay, so what does this mean? This is house price is almost flat. Well, that includes new houses. This is pre-existing houses or secondhand houses or investment houses. Okay, it's so steep. Did you see that? So steep. Okay. Interesting, because there is a contradiction in some of the statistics that newsletter that you're gonna find out. So the house price value, okay, doesn't necessarily mean the house is sold on that price. Are you getting this? It's the listing value. People are listing their house for $1 million. They only sold it for 700. They list their house for 1.2. They could only sell them at a 900. Okay, so this is not the real closing number that people are getting, right? And a residential house starts, as we know, is slow. The inventory is going down, so the new inventory is not going up. Okay, is actually going down. The consumer confidence is pretty low. What do? They hold on their cashes. Okay, they don't want to spend money on it, on large consumptions, large acquisitions, including houses. Okay, so as we said, right now the market has, on average in Texas, is about 5.2-ish month of inventory. And if you really look at it, less than 5 months is a seller's market, and the larger than 7 months is a buyer's market. But hold on, John, you and Steve just said this is a buyer's market. Yes, of course, these are just rule of thumb on the inventory level. However, there is a consumer sentiments, there is a motivation that people have in purchasing inventories and purchasing investment houses. And because there are people, they're just hesitating. So the wholesalers, this is our markets. We are the buyers, not the average Joe, average buyers. Okay. Here, the buyer's market means what? Investor buyers. Got it, folks? If you're the wholesaler, if you're deal makers, this is your market. Okay. With that said, keep in your mind, off-market lead is not distressed, because off-market leads can be the listings that take off the listings from MLS. That's called off-market leads. Okay. All the houses that are not sold, to knock on the door doesn't help you at all. However, distressed is what we mine in Real Estate IQ. We have engineers, we do researches, and we do the data cleansings, and then all these contributed to what we call distressed property, distressed owner contact list. They are absolute off-market leads, but off-market leads, OML, is not necessarily distressed. So you got to think smartly, and then work with the smart people like Tamara, Steve, myself, and our coaches. All right. With that said, I'm going to yield the stage back to Steve, and then we'll continue on with the rest.
Thank you, John. And well, we got 5 minutes left, and being the fact that this is our last session of the year, I wanted to just thank both you, Tamla, and John for being our speaker on this new format that we started, I think, either August, September timeframe. And I just thought that having more speakers and a variety of topics that has to do with real estate and investment finance, entrepreneurship, right? All of that building together is a really cool kind of topic mix for everybody. And for those of you who are listening in and watching our recordings, let us know. This is actually a really good time for us to reflect and learn from you, right? What topic is good and interesting? What topic is something that you don't want to hear? We should cut that out. This is the time where we really want to hear from you, and so we can kind of continue to enhance our content and add more value to you. And Tamla, John, any I guess parting words for the year, and then we'll see everybody on I think it's the 8th of January, the first first Thursday of January. That doesn't include the New Year's Day.
I just want to tell everybody Merry Christmas, Happy Holidays, Happy New Year. Have a blessed New Year.
That is so beautiful. May our Lord shine his face upon you and be gracious to you. May our Lord bless you, give you peace, and turn his face upon you every single day to the end of the year and starting off the next year. And God bless everyone. We love you, we care about you, and we want to win the deals, win this life with you. God bless everyone.
Well, with that said, let me just finish this up by welcoming you to our more events, our additional events. Tonight we have pre-foreclosure gold mine, and then tomorrow we got 2 events. One is our meetup, where again we roll up our sleeves and we actively do outreach to the distressed sellers. And then we also have our Friday open house, where we really talk about the big picture, right? This event and all these events, along with all the other pieces that we're building, are all going into strategically building up for the same goal. So if you're really curious about how you can get involved and how what we're trying to build, Friday open house is a really awesome event to join, and invite your friends to join as well. And then we'll have a replay for pre-foreclosure gold mine for those that have more availability on Saturdays. And with that said, we will end the event with Happy New Year, Merry Christmas, Happy New Year, and let's take action and start your real estate journey with us. Thank you, everybody.
Have a good day. Bye, Tamla.
Bye, John. Bye, Steve. Bye, everyone.
Bye, everyone.
See you, everybody. Bye, everybody, and have a great rest of the year. We'll stay in touch. Bye-bye.